Good afternoon, traders. Thank you for joining us at parttimetrader.net. We're just going to go over a little bit of back testing. So I've got the alerts up from October. So what you're seeing here, these are all our alerts that had triggered in October and November and December. And we're just going to slowly go through some of them as examples to see what is it that you need to be prepared for. Like, the alert triggered. What do I do? Where's my stop loss? Where's my profit target? Oh, it went against me. Should I go back in again? Some questions that people always ask. And we're going to go over CRDO. It's a really good example of how the alert, once it triggers, it can go against you and then it can turn right around. So one strategy we talk about is the pullback strategy, where you're buying the stock back after it breaks out and after it pulls back 2 or 3 days and then goes above the previous day's high. So we've got here CRDO on October 24th, as you can see in our spreadsheet here. And I think it would have been added on October 17th. That could be a mistake. So October 17th is when all these alerts came in. So let's go look at why on October 17th. I'll tell you why. See, on October 17th, this showed up because this is now $38, and it's comparing to maybe 30 days ago. What was the price difference? And the price difference was greater than 30%, and that's why it showed up on alerts. And also some big volume had come in some time back in the last 30 days or 60 days. So CRDO shows up. As you can see here, it's moved up. We call this the high tight flag pattern, where you've got a flag pole, and this is the flag. And then what you do is you just mentally, I do this. I don't draw boxes while I'm trading or analyzing, but just to show you an example, I'm going to draw a box here. So we've got the flag pole, and we've got a little bit of a box being created here. Okay, so the strategy is once it goes above that box, so here the price was 36.70, you would be buying that stock. And we don't anticipate, we don't buy it down here thinking, oh, I'm getting a good price at 33.69. I think it's going to go up. We don't care about what you think, right? We only react to price action. We don't forecast. We're not market prediction analysts. We're just traders who react to price action. So as you can see, this box failed. We had a little pullback, and then we went back up. Nothing to do here. Nothing at all. Now it showed up in our alerts way over here. Why? Because the screener is measuring the price difference from the last 30 days, and we're looking at certain performance metrics. So this one had qualified, and it showed up on our ticker, in our screener on October 17th. So on October 17th, if you walked in here, you would have drawn a little box here. I've just drawn a bigger box here because that's how long the box lasted. The other part of the strategy is, I gave you a sneak preview, is we want this to go sideways for at least 5 days. The longer it goes sideways, the better, right? If it's going sideways for 7 to 10 days, that's much better. And when it does that and it breaks out of that, we're in. So we're going to go slowly. I'm going to show you what happens. We've got our highs here on 40.60. So the on-stop buy order you would put in the night before would be like 41.15 or 41.10. And you would put the stop below that day's high, that day's low, sorry. So here we go. We have a little bit of a breakout. Now, the thing I want to bring to your attention is that what really qualifies for a breakout entry is the volume must go up. So here we don't have a lot of volume that's come in. So maybe this would not have been the ideal trigger. But let's just see if you took that trade, what would happen, right? The next day it pulled back. Why? Because you didn't have volume, right? You want to have volume. Look, see this volume here, this volume candle, right? You want something like that. And same pattern, right? We've just a little bit of a flag here. Once it broke that price, did you notice the follow through? Yes, it pulled back, but it didn't pull back way below. It just pulled back a little and then kept going. Why? Because you had huge volume on the day of the breakout. We don't have huge volume here. So this is something for concern. Now let's let this play out. It's pulling back, and now look what happened. After it pulled back, some volume came in. That's okay volume. It's almost double. The average down here was down here. So we're looking at a pullback trade here. This has gone down 2 days in a row. And then once it eats up this candle halfway, that's your entry. Really, in a micro world, this is what you're doing. Once prices push up half that candle and above this candle, for sure, this is looking to go continue up as sellers are done selling and you've got some big volume coming in. So we let it go the next day. See when it went sideways and then it went higher, as you can see here. And then it went higher there. So now you're literally in the money. You bought it at 38, you're up, it's at 44. You could take $5 profit on this and sell half your position. Your initial entry is 38. So your stop loss can be way down here at 33 and you forget about this. You don't have to look at it anymore. You move on to the next trade. So I'm just going to go put a marker here at 33. Let's just say 33.50. Right? So 33.50, roughly around here, this is your stop loss. And you let it run and you move on to the next trade. You don't even have to look at this anymore because now you've got a break even trade, which means that even if it goes against you, you're not going to lose any money and there's no stress. You don't have to think about this. You don't have to monitor it. You just leave it alone for the next 2-3 weeks, maybe a month, and you just forget about it. As you can see here, we have a little bit of a pullback and get a little buy alert here, and it starts pushing back up again. So now you look like, or you're out of the woods, hasn't touched your stop. Yes, you felt some heat. You saw it at 48, went all the way down to 40. All that profit, you're thinking in your mind, oh, I just lost $800 if I bought 100 shares of this. You can't think like that. We cannot think. We cannot dollar count. Dr. Elder talks about this in his Trading for a Living book, that do not dollar count. Just look at the charts, look at the setup. And you're in this trade, and then earnings comes out. Now, it's a break-even trade for you. Let's say it's 48 and they came out with bad earnings. The worst it could do is go down to maybe 35, which is a big drop, and you're still in the profit. You still haven't lost money. But look what happened the next day. We had a surprise, earnings surprise, and big volume came in. The stock shot up to 70, and the rest is history, right? So it's kind of going sideways now. And where are we now? Oh, we've created another box here, right? See this box? And what you see here is that the stock has got this other box created. And one strategy that's called the Darvas box strategy is that he buys above this box, and if it's making a 52-week high, he's buying above this box as well. And look what happens. It does break out, and then we get a little bit of a pullback. It's a massive pullback in my view. And then comes, so this thing's very volatile, right? This is why you have to start taking some profits off the table. Once you get in, you get a big return and you see it's not doing much, you could literally close this trade and move on. Or if you want to keep your stop at 33 and you want to swing for maybe on the monthly chart, you're expecting bigger numbers, well, let's pull it up. Let's look at the monthly. So the monthly's telling you, number one, this is a risky stock because it IPO'd in 2022, right? Not a lot of data here. All-time high, which is very good for the stock. It could continue higher. There's no limit, right? Sky's the limit on this, but very risky because it's a 2022 IPO. So that's an example of one of the alerts. I want to thank you for joining us at parttimetrader.net. I'm just going to stop the recording here.